All of my Sofi investors, welcome back to the channel. I hope you guys had a great day, but Sofi did not have a great day, down about 7.69%. So if you have not seen your portfolio today, I highly recommend that you do not for the rest of the day. Tomorrow looks to be a lot better. We did get some good news here in After Hours that I do want to go over with you guys. We have some very comical news out of Russia that I do want to share with you. They were downgraded to junk bond levels and much more on that front as well. I also do want to go over what Fed Jerome Powell said today and why the markets got so beaten down. A lot of our stocks, specifically my portfolio, which I will show you guys, got beaten into the ground. And I want to go over exactly why that is, as well as all of the specific data around Sofi that you need to know. So if that is something you are interested in, staying up to date with everything that'll make you money around Sofi and the broad markets, trades that I'm looking at, just everything, hit the like button, number one, and subscribe to the channel, number two. But if you also like to get free money just as much as I do, check out the links down below in the description of this video to sign up for Public, Webull, and Moomoo. No deposit necessary for Public. Get yourself a free stock. Deposit $100 with Webull and Moomoo and get 5 free stocks. I believe Webull is giving out 10 free stocks right now, but don't quote me on that. Check it out nonetheless. So let's get into exactly what happened today. So Sofi down almost $1, down 7.69%. My portfolio took an absolute beating, and I will show you guys that in just one second. But Sofi's recent acquisition did close here in After Hours, and that was basically dilution of about 10% of the stock. And that's why you've seen the share price the day this was announced close about 10% down. There's usually a 1-to-1 correlation with that. Sometimes it can defer just a little bit, but nonetheless, this will be a positive, I think, starting tomorrow, now that that dilution fear is gone. So if I had good earnings, dilution fear gone, we should do well tomorrow, depending on how the markets do go. But really what happened today with Fed Jerome Powell was what he said yesterday as well. And this is what I talked about in the video yesterday. He basically said, hey, there's a lot of uncertainties around Ukraine, Russia, the supply constraints, what that'll do for prices. We think it's going to make everything go up. Wheat, corn, oil, all of it is almost at all-time highs. So you're definitely going to see some inflation in that sense. But at the same time, the Fed was basically indicating that who knows what kind of financial problems this will bring later down the line once the supply constraints, tied to Ukraine and Russia, once the inflationary pressures to a lot of those commodities start to die down. What is that going to lead for the overall markets? What will that do? They want price stability and maximum employment. They want low inflation. So you could see an inflation boost soon, and you are seeing that right now, but then it could subside dramatically, and if the Fed acts too soon, they could raise rates too fast and slow down a lot of demand, or too much demand in the marketplace. So the Fed was basically saying they expect to raise rates, and they will raise rates by March. They will also start to lower their balance sheet right after that March meeting, but he basically wouldn't give an outline to what they expect to do after March. They basically said, we're going to watch the data, we're going to see how this is going to affect the global economy, especially our economy, and go from there. So that was really a bullish thing. The markets took that very bullish yesterday, but today they had a bit of a change of heart, which is pretty common these days. You're up and you're down. Certain sectors are doing better than others. The Dow certainly did a lot better than what your NASDAQ or S&P stocks did do today. And if you look at my portfolio, and I just want to show you guys this in case you guys are invested in some of these stocks, which I'm sure you are, and you're feeling a lot of pain like me. My portfolio was down 8.39% today. This is one of my portfolios, not all of my portfolios. I have Webull, Moomoo, and Public. Like I said, I have a lot of money in all of those as well. This is more my public portfolio because it is a lot easier to show you guys what I'm doing actively. Nonetheless, I have Mullen Automotives. I'm up massively on that still, but it was down 8% today. PayPal, great business. Talk about a stock that's under its pre-pandemic levels, that has grown revenue 35%, that is beaten into the ground. You're looking at PayPal, down about 5%. Affirm, 7.5%. Lucid, 7.2%. Sofi, 7%. MindMed, down 4%. Square, down 8%. DraftKings down 10, AMC down 2.86, UWMC down 7, AMD down 5, Abivai, my pharmaceutical dividend gold mine over here, up 0.5%. Great. The only positive stock I had in my portfolio. Even Snapchat, which just posted their first profit, was down 4.5%. So this pain is not discretionary. It's very indiscriminate. It's attacking everything. Everything that is higher growth, everything that is going to be a great stock 5 or 10 years from now is not getting any love today. And these are horrible sell-offs. This is terrible. Comparatively to what CNBC says the indexes did today, it's very obvious to see that a lot of the moves were really in the bigger stocks, right? You can see the Dow Jones only down about 0.29%, S&P down 0.5%, and the Nasdaq down about 1.5%. Russell 2000 down 1.29%. You want to see what's also very interesting? The Russian economy to shrink 35% due to Ukraine invasion sanctions, JP Morgan says. Not good whatsoever, my friends. Not good. And we can see down here, Twitter is such a great place for news. I love it. I love it. But you could see that Russia was actually downgraded from BBB to CCC minus. That means they are no longer investment grade. They are junk bonds, and they are basically presumed to go to zero. The Russian economy is pretty much going to zero. They're going to go bankrupt, right? You've seen the ruble go crazy, go up a lot, and it's weird because when currencies go up, people will say that the currency is weakening because it's weakening compared to the dollar, and it is weakened so much that so many people are feeling so much pain. Even Citigroup, they took a $10 billion loss from their Russian investments. That's about 10% of the market cap of Citigroup. Kind of crazy. And take a look at this. It says, London listed Russian stocks are collapsing with trading now suspended. The London listed stocks of Russian companies have plummeted since the invasion of Ukraine and ensuing crippling economic sanctions on the country's businesses, institutions, and individuals by the U.S. and its Western allies. Superbank was down 99.72% year to date to trade for around a single penny before the suspension. While Gazprom was down 93.71%, Lukoil was down 99.2%, and Polybus down 95.58%, and EN up 20.51%. Oh man, you do not want to be in a Russian investor right now. You have had a very, very bad day. But you know what's even funnier about all of this is that Lukoil just said that they should halt the war. Something funny happens after your stock goes down 99.2%. All of a sudden you want to halt the war. Okay, understand that. But why am I saying this? Because it is going to cause fear in the markets. When you see headlines like this, Russian economy to shrink 35%, it's going to cause fear. Like, hey, what if the American market shrinks 2%? A fraction of Russia, because there will be consequences for all of these sanctions. And we know that. That's not a question. So with that being said, if the markets are fearful, that's going to lead to a lot of the stocks that we invest in to head down. And that is what is going on right now. That is the root cause of this sell-off that we are seeing. We're going to have to wait and see what they do as far as oil is concerned. If Putin, you know, Mr. Young Putin right here, he decides to go after oil, that's going to be a interesting situation nonetheless. But heading back to Sofi, now that you guys know why Sofi and a lot of high growth stocks are down so much, we can head back to Sofi. We can see, like I said, the option flow sentiment, a massive dollar amount of orders, 16.08 million, positive order value of 62%. That is very bullish in my eyes. Institutions are finding it quite attractive to buy Sofi right now, Sofi options. But at the same time, look what's going on. Borrowed shares of 9.42 42 million, borrow change of 6.26 million. So you're seeing a lot of shorting activity that has been happening after SoFi earnings, and that's why the price of the stock as well is going down so much. We're looking at 18.55% short interest of free float. 118.66 million shares that are sold short. Look at this, cost to borrow max of 8.27%. And what do you see up here? The share utilization is 100%. So that means nobody is willing to lend out their stock of SoFi for 8.27%. That is also very bullish. The higher this cost to borrow max number goes and the longer the utilization stays at 100% gives us a good gauge of what kind of percentage institutions need to lend out the stock of SoFi, thus giving us a range on, hey, we could see potentially a big rally here pretty shortly. Or pretty soon, and that's what I'm going to be paying a lot of attention to, and I will keep you guys up to date with that, because I think that is one of the most important things to get a glimpse of how institutions and hedge funds think about a certain stock, specifically in this case with SoFi. Days to cover is sitting at 3. So very hard for shorts to get out of their short positions once you actually do start to rally. And as far as the Fed rate monitor, you can see a lot of interesting things happening here. So the Fed, the FOMC report and the meeting is 1 week, 5 days, 20 hours, and 52 minutes away. I love how specific they are, but that's on March 16th at 2 p.m. We already know what is going to happen. About 98.8% of market participants expect the rates to go up by 0.25%. Surprisingly, 1.2% of investors expect the rates to stay at 0. So you're seeing a very dovish tone for this next meeting, March 16th, but look at July 27th. You were seeing 75.4% of investors expecting the rates to be in between 1 and 1.25%. So that means a majority of investors are expecting at least 0.5% rate hike from now until July. So that is also helping to bring the markets down. So we have the March meeting, and then we have the April and the May meeting, I believe, and then we have this July meeting. Or maybe one of them was different. Doesn't matter. We have about 3 more meetings until July. So if people are expecting this, they're expecting a 0.5% rate hike by July, at least one of them, and that is also helping to fuel this sell-off that we are seeing right now. So very interesting in that regard. As far as the technical analysis is concerned, a lot of support at that $10 price. I really don't see us falling under that unless things get really bad in the markets, and we'll just have to wait and see if that happens. Wouldn't surprise me at this point if it does. Wouldn't surprise me if we rally hard. Nothing is really going to surprise me at this current moment, but we did break under the 20-day simple moving average, which has been a level of severe resistance. Severe resistance. We could see we were up 18% after earnings, went all the way up to almost $13, a little bit over $13 per share. We closed under the 20-day moving average. Same thing next day. We tried to go up a little bit today, straight back down. So a lot of resistance around this blue line right here. We need to break out above that. It's going to start compressing the lower we go, and you're going to see this line continue to trend down, and we're going to continue to trend along this $10 support level until we finally diverge and get strength to the upside, which I think will inevitably happen. That major level of resistance as well, besides the 20-day simple moving average, is going to be $14 per share. Inevitably, we are going to break above that. The RSI, the relative strength index, is at 42.15, so that is indicating we are a little bit oversold as of right now. The volume was lower for today than we have been over the past couple of days. Yesterday's volume was 147 million. Today, 69.7 million. So still a high volume day, but a little bit less than what we have seen in the past. But volume still just really high since January, about the start of 2022. So interesting right there. The MACD is still bullish, which is just very hard to put my brain around. The yellow line is above the blue line, so if that is any indication, we should be set to make a slight move to the upside. But that is going to be all for this video. I hope you guys found some value out of it. If you want me to talk about anything else, let me know what I missed. I will surely go over that, maybe in another video tonight, maybe in a video tomorrow. I will give you the credit for it, so let me know if there's something that I missed. Thank you guys for watching. Make sure to get your free stock link down below in the description. But that is going to be all. You guys enjoy the rest of your night.